Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard Macbeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Nice to be with you again.
Hilliard, the markets, of course, in a disastrous crash for many people since the last time we talked a couple of weeks ago. What's the take that you have on it, and how do your clients feel about it?
Well, the clients are certainly nervous, and we had been preparing for something. We didn't obviously predict the virus or the oil crash ahead of time specifically, but we felt that after 10, 11 years, the bull market is bound to run out of steam, and then there'll be a bear market. And so now the bear market is here. So we had our portfolio set up to minimize the impact, but you can't protect people completely from the impact. And so we've gotten a lot of emails and calls, obviously people that are nervous. Now, people can check online to see that their accounts haven't dropped as much as the market is saying, but they tend to extrapolate. I was talking to a recently retired doctor yesterday, and he said, I reminded him that his account was doing well and everything, but he's obviously extrapolating into the future, and in his mind, his whole retirement has changed now. So that's probably not going to be correct, but that's, in his mind, that's where he goes, and especially when people have retired and they don't have the higher incomes coming in, they get very, very jumpy. So we spent the last couple of weeks reassuring people and showing them, and also we made some changes as well and lowered the risk, even though the risk already was a pretty low level. So, but there have been a couple of surprises, and one of them, of course, is the oil price going down to $30 a barrel, and that's been a huge change. Now, normally that only happens in a recession, and but this time it's blamed on Russia and Saudi Arabia's announcing increased production instead of cutting back production. But it could also be a sign that the global economy is in recession already.
And if we have a global recession, that's going to affect a lot of things, but perhaps things that are less vulnerable, agricultural goods, no matter whether you're in a recession or in boom times, people have to eat.
Exactly. So people, I think a lot of people have spent the last few days looking for parts of the market that are relatively immune to this downturn, but it turns out that there's very little that is immune, because one of the problems traditionally you'd go to the banking sector or the utility sector in a situation where the price of oil dropped so much, but the problem with the banking sector, and especially in Canada, is the banks are viewed as having exposure to loan losses related to the oil and gas industry. And the utility sector, a lot of the utilities are heavily levered. So one of the things that's happened in the last 5 or 6 years is companies have gone out and borrowed money to buy back their own stock to reduce their number of shares outstanding, which juices up their earnings per share. And then they've also increased their dividends, which especially utility shareholders of utilities love to have higher dividends every year. So these companies aren't as safe as they used to be. So it's finding the safe haven is really you almost have to go to government bonds or government treasury bills. But one of the things that is a really strong hint that we're in a very big slowdown economically is the fact that for a while there, I think today it's recovered, but 10-year government of the United States bond was well below 1%, which has never happened before. That's the lowest it's ever been, going back thousands of years. So that's a hint that there's something very, very big happening. And the German similar bond in Germany got down to almost minus 1%. So, 10 years later, they give you back 1% less in when your bond matures, and you get no interest. So you're guaranteed loss over 10 years. So those are just crazy things.
So how are the banks doing right now in Canada?
So the banks, it's really interesting because, of course, as part of my book, When the Bubble Burst, Surviving the Canadian Real Estate Crash, I had a whole chapter on the banks, plus the debt levels are sort of weaved throughout the whole story. And what's interesting about this is the banks yesterday dropped up to 10% in their share value, and there's a rally happening this morning as we're talking on, the banks are not participating very well in that rally. In fact, some of the banks have gone down a little bit, even a little bit more. So obviously there's a lot of concern. Now, I'm pretty sure, based on a lot of experience talking to investors all across Canada and talking to bankers, that people have not yet considered the possibility that people might actually default on their home mortgages. So this weakness in the bank's shares is more related to people worrying that they're going to lose money because oil and gas companies are going to default on their loans. And there is in the segment, there's about $16 billion in oil and gas loans outstanding, and but that's a pretty tiny fraction of the total bank loans out there. It would be less than 1%. The banks claim they have almost no exposure. Royal Bank says they have 1.6% exposure. I think the highest one is BMO at 2.5% or something. But of course, that doesn't count the indirect effects. And the indirect effects would be, what if people work in the oil patch and then lose their job, and then they can't pay their mortgage or their car loan or their credit card. So there's some of the biggest spenders in Canada are based in oil areas like Newfoundland, Alberta, and Saskatchewan, and they are also more likely to default on some of these loans. So, but I don't think the market is looking that far beyond just the oil and gas impact. So the relative weakness in the bank stocks would be expanded if people started to believe that this was going to leak into the real estate market as well as I believe it will. But I don't think the market is there yet.
We'll have more with Hilliard Macbeth right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, any of your people that you've talked to feel that the market downturn is some kind of media conspiracy to go after the U.S. administration, or that Italy is locking down their country because of the coronavirus in some mean way to get back at President Trump for some reason?
Well, there certainly is an election on, and one of the things that people were wondering is if recession, this is going back several months, and I remember writing in my weekend note, which, by the way, people are free to sign up for to receive on a weekly basis if they wish. A couple of months ago, I wrote about Donald Trump's chances of re-election in November 2020. And the key element is, how is the economy doing? And it isn't right at November, but people make up their minds a few months beforehand. So it's probably the spring, early summer when people will make a decision. And so it seemed like, although his approval rating is quite low, the way the Electoral College works, if he can maintain his support in some of those, basic industry states, not on the coast. Of course, he's not going to win on the East Coast or the West Coast, but in the heartland, the center, then he can get reelected, even though he only has a 43% approval rating generally in the population. But if the economy takes a downturn, then he has no chance of getting reelected. So I can understand why he would think that there's a conspiracy against him to cause the economy to weaken. But I don't know how that's possible that somebody would create the virus in order to derail Donald Trump's reelection chances. So we know that in a recession, I'm pretty sure it's very close to 100% of the time the government gets tossed out. And usually it's not even the government's fault. But if the stock market crashes into a bear market, or if the recession comes, and usually they go together, then the government gets tossed, and that's just the way things work. Although Donald Trump supporters might believe it's a conspiracy.
Now, something with the coronavirus, there are so many people who are self-employed or hourly paid employees, or they don't have a health plan at work, so they have to pay for their expenses. Does the government have to come up with some way in Canada to make sure that these people don't go bankrupt or lose their homes?
Well, one of the things that there's a bunch of angles to look at this with, but one of them is just this idea, and I thought it was exaggerated at the time, but one of the big credit rating agencies in I think it was an American one, but they were looking at Canada. They said that something like 44% of all the households in Canada are only $200 away from a default because they've got so much debt. Well, it doesn't take much of a downturn and a recession to push at least a few people over the edge in terms of just $200. And I think it's an exaggeration, but we've never gone into recession with so much debt at the household level. It's completely unprecedented. And increasingly the corporate level has a lot of debt too as well. So the one entity in the equation that doesn't have much debt right now is the federal government, but before this recession is over, their debt will go way up. So there has to be a government help, but so far we had the emergency rate cut last week, 50 basis points. But when you're on the edge of losing your job or defaulting on your credit cards or your car loans, it doesn't really matter to you that the interest rate at the Bank of Canada has gone from 1.5 down to 1 or something like that. The rates that consumers are paying are much higher than that anyway. So generally what they're debating right now in Alberta, because obviously this drop in the oil price down to $30 a barrel is going to hit Alberta really hard, is whether the government should step in. And of course, the conservative instinct is to say, well, we'll cut taxes and that'll solve it. Well, obviously that's not going to solve it in this case. Unemployed people don't pay taxes anyway. The opposition, the NDP opposition, who got ousted in the last election, said yesterday that the government has to step in and hire people and create jobs for them. And that's something that sort of runs against nature. But all over the world, Europe, the U.S., China, South Korea, everywhere, people are trying to figure out what to do to cushion the blow of people that might be told to stay home for 2 months or 3 months. If they lose their income for 2 or 3 months, an awful lot of people will just stop paying their bill payments and stop paying their debt charges. And then what happens is the cascading effect is, and this is what happened in the global financial crisis in 2009, the banks start worrying if the people that they're dealing with, other banks, for instance, are going to be in liquidity issues, and so they get afraid to transfer money to them. And once that happens, then the whole system seizes up. So the government's role is to step in at that point and say, we will do a short-term finance. And I understand that the U.S. government is going to have a press conference this afternoon to talk about what they're going to do. But they're talking about help for airlines and cruise ship lines and things like that. That doesn't go far enough. They need to have more of a general help with liquidity. It's really, if the virus turns out to be short-term, it'll really be just a couple of months of liquidity, and that is something that only the government can step in and reassure. You can't have one bank that says, "Oh, well, we'll provide liquidity." Well, no, that doesn't work, because then people immediately start saying, "Well, what about the other banks?" Like, And if they start pulling the money out of the banks, out of the Bank of Montreal to go to the Royal Bank or vice versa, then it just doesn't work. So it has to be a higher authority like a government that can step in and say, we will provide liquidity. And I worry that the governments are going to be slow to act in this because it goes, first of all, politically it's not very attractive. People have generally over the last 45 years gotten used to a low involvement, minimal involvement of government and let the private sector do it. And so it runs against all political instincts. So politicians generally don't want to do it. So it takes a crisis for them to act. You would remember the bailouts that happened in 2009 in the U.S. The first vote they had on it, the politicians voted against it, and then the stock market went down another 10,000 points or something, and then the second time they voted for it, but reluctantly. And that was only $700 billion bailout. That wasn't a very big number. This time they might need to do a much bigger bailout, and I don't know. It's going to be very interesting to see how all this unfolds.
Well, when are they going to start rolling out these big infrastructure projects they kept promising? We still haven't had shovels in the ground for Vancouver's latest rapid transit project. Maybe now's the time to start building rapid transit into the Fraser Valley. I'm sure other cities have projects, just ordinary roads, water, and sewer, need work across the country where we have pipelines in the ground that are bursting constantly because they're over 100 years old. Is this the time to roll out the money? And is this what the Conservatives in Parliament warned about, with the Trudeau government spending at a rate that was higher than the government spent at the height of the Second World War?
Yeah, for sure. I mean, and the problem with Canada, and it's true in the U.S. as well, partly, is that it's a question of who does the work. So in Canada, the municipalities or the provinces would actually be the ones that spend the money on a lot of these shovel. You remember that term, shovel ready? There's a limited number of shovel ready projects, and by the time they design the parameters of the government spending program to limit things like fraud and wasteful spending and all that takes 6 months, a year, and then they transfer the money to the province or the municipality, and then it takes them another 6 months or a year to get sorted out and argue about who pays what share of the funding. You're talking 2 years later, so this is something that probably needs to be done in the next 3 or 4 months, not 2 years out. So the system is not set up to act quickly when it comes to, even though they use the term shovel ready, these projects are never shovel ready, and some of the design work has been done maybe, but they have to pick the contractors and they have to sort out a whole bunch of issues. It'll be a two-step thing. There'll be an immediate a need for liquidity so that people don't start basically, being afraid to do any business at all because they're afraid that somebody's going to go bankrupt in the chain of payments. And that's number one. And then very quickly start a program of spending money, but wisely. They don't, like this whole thing about building projects that don't need to be built. China's the one that knows how to do this, and they just finished building a second airport for Beijing, and but even that there's a limit because Beijing doesn't need a third airport, and I think they've got high-speed rail lines practically between every major city in China now, so they've run out of projects to do. And the problem is if you keep funneling the money into the economy when there aren't good projects to do, then you get the money going into speculation on real estate and other stuff like that, which is, some people think that's good, but I happen to think that's bad. It's not good for the economy at all.
Well, and don't forget, over 70% of Canadians and probably Americans as well are employed by small business companies with 50 or fewer employees. How do these mass projects help our hairdressers, our waiters and waitresses, bartenders, grocery store clerks, and so on, who might be laid off or cut back in hours?
Yeah, no, I think that's right. And then, of course, the virus concerns are going to hit a lot of people that do face-to-face business, and there's no help for them. I know that most of the help, when the help actually does get done, you think back to TARP in the global financial crisis. There was the $700 billion bailout, which mostly went to the big banks, and then GM and Chrysler were bailed out because they were about to go bankrupt. that there was no bailout for the guy who couldn't pay his mortgage on his house and the small business person that maybe only employed one or two people. The only way you can guarantee getting a government bailout is to employ thousands of people, like Bombardier or something like that.
And didn't studies show that it would have been better for the government to have a program to have paid the mortgages for those people rather than bail out the banks?
Well, they had a program. It was quite interesting. They had a program. President Obama did a program where the people could go and get mortgage reduction. And there's been several studies on it. And basically the mortgage companies didn't want it. So they just made it so difficult for these people that were applying for this mortgage reduction that they just never got off the ground. It was a nightmare. And they preferred to foreclose on people. And then they had buyers for the houses, which, by the way, even now, more than 10 years, 11, 12 years later, these houses that were foreclosed on, they're still not resold. They were bought. A lot of them were bought by hedge funds who are renting them out, and they haven't been resold back into the market yet because there hasn't been a lot of first-time buyers for modest price housing in the U.S. It's coming. It was coming until this latest crisis hit. It was coming, but it was even 11 years later. There was still a hangover from that. So there was a program, but it just never. It's kind of like the first-time buyer program in British Columbia, where they were having loans, and there was such a small number of people who could actually qualify for it. So no, usually what happens is there has to be a crisis. The government does the big stuff, and then we kind of go back to normal. And one of the things I talk about in the second edition of my book is how do we get off this how do we break the cycle of these crises so the bubble, the crises, the bursting of the bubble, and then the government rescue. It's crazy. There's so much waste and so much loss involved in that, and so much unfairness of who gets bailed out and who doesn't get bailed out. There has to be a way to break the cycle, but it would require government and regulatory authorities making some big changes as to how they work. As far as I can tell right now, they don't take much action until there's a crisis, and when they do, and then when they're in the middle of a crisis, the decisions they make are not always very good, right? And it's because they're in the middle of a crisis.
We'll have more with Hilliard Macbeth right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, tourist-related businesses are likely to take a huge pounding from travel restrictions and so on connected to the virus. We have the BC government advising people not to take cruises right now. And Vancouver is one of the major cruise ship terminals in the world with, I think, over 200 ships a year calling here. And every ship that stops drops about $3 million into the local economy. Can governments do anything to mitigate the impact of what's going to happen to tourism? Probably right across the country, because Toronto's a big draw. Banff is a big draw.
Tourism is not, for sure in Vancouver and places like that, but I remember years ago there was a study done, the government of Canada does all these ads for tourism, and then the provinces do ads for tourism, and somebody decided to do a study, are these ads effective? And after all this money is spent on the ads, the only two places anybody could mention if you went to other countries far away were Niagara Falls and Banff, Alberta. Even after all the ads. So I see these ads for visiting Newfoundland on TV and stuff, and I'm thinking, gee, it's kind of throwing money away. But anyway, getting back to it's not that big a part of the Canadian economy. It's pretty small. So obviously there will be individuals that are badly hurt by a lack of tourism, which is undoubtedly coming. if the virus continues to spread the way it looks like it's going to. But it's not going to, much more important is the drop in the oil price to $30 a barrel. That is just devastating for the Canadian economy. People in Toronto, and it's understandable because they're not in Alberta and they don't really understand, but they don't really understand how important that is to the whole economy of Canada. The balance of payments, the balance between exports and imports, the Canadian dollar, all that stuff is pretty closely tied to energy and resources. So I don't see much help for tourism, and I don't know what they can do about the international price of oil. I don't think there's a whole lot to do. So even though there's a big rally happening as we're speaking on Wednesday morning here, the Canadian dollar is down almost another full percentage. Well, it is a full percentage point to 72.6 cents American. And I've been thinking for a long time now that it's going to go into the 65 to 70 cent range. And once it bottoms out in there, that when the Canadian dollar makes a move, it tends to stay. So for a long, long time, it was sort of around 75, 78 cents, and then it'll find a new level, probably in the 65 to 70 cent range, and that'll be the case for quite a while unless the oil price recovers, which we don't expect. So that'll help tourism. So now it'll be really cheap to come to, I don't know about on cruises, but certainly to go to Niagara Falls and Banff, it'll be much cheaper for the Americans to come. And in the past, I remember there were lots of times when the Canadian dollar went down, maybe not as dramatically as 65 cents, but they do seem to be able to find tourists to come when the dollar is that low. But it's going to cause tremendous stress in the corporate sector because as part of this borrowing binge that households and corporations have gone on, the corporations tend to borrow in the U.S. bond market in U.S. dollars, so they're going to have a terrible time paying the interest and the repayment of the loan if the Canadian dollar goes down to 65 cents.
Hilliard, what about housing? Very low interest rates, low mortgage rates. I know real estate is a huge part of the Canadian economy, but even with ultra low rates, if people are worried about their jobs, are they going to be rushing out to buy a house? Well,
it's interesting that you bring that up because, there's the first time buyer, which obviously they're going to buy a house, if they're ready to buy a house, they're going to buy a house, whether the interest rate is 2%, which is just, some mortgage rates are getting as low as 2% right now, or 5%. It doesn't make any difference to them. They go to the bank or the mortgage broker and they say, what can we afford? And then they just go ahead and buy what they can afford. And, if rates are 2%, maybe they can afford a little bit more house, a little bit bigger house, and they go ahead. So it doesn't really change their behavior, but in the move up bracket, so say somebody's got a $500,000 house and they really, really want to move up to $1 million house, then the interest rate makes a huge difference. So in theory, and this is the monetary policy channel, it basically works through debt, and it's the biggest debt that everybody has is their mortgage debt, and second biggest is the car loan. So it's designed to, monetary policy or interest rate cuts is designed to cause people to go out and borrow more money, and that's great in times when things are kind of going along normally. But when there's a global recession underway and a collapse in the price of oil and a collapse in the Canadian dollar, and people start worrying about their jobs for a brief time, usually it doesn't last more than a few months, maybe a year or two. They don't care if the interest rate goes down to 1%. It doesn't matter. They're not going to take on that big house purchase at $1 million when they're sitting in a $500,000 house. And so the interest rate doesn't have much factor. And then the other thing, of course, is if the real estate market is weak, they don't want to buy the $1 million house before they sell a $500,000 house, because they don't want to own two houses. And it gets really hard to sell houses. So there's a friction. The normal friction in real estate goes up exponentially, and that really hurts the move up market because, actually for quite a while there the housing market was so hot that I remember being advised, it terrified me, but I remember being advised when we made our last change, which was about 12, 13 years ago, say, just buy the new one and then just keep the old one too. Don't worry about it. And I thought, no, I have to sell the old one before we buy the new one. Lots of people weren't concerned about that at all. But when the housing market's weak, they get very concerned about it, which is where we're at now, especially in Alberta. And so it wouldn't matter if they cut the interest rates 4 times. And I'm sure I'm not sure. I'm pretty sure that they'll probably come out with another cut. I called the cut last week an emergency cut. Maybe that was unfair, but it was certainly bigger than what they were talking, normally 25 basis points, and they cut it 50 basis points. If they cut again, like next week, or the week after, if the last one was an emergency cut, the next one you'd have to call it a panic cut. and the problem with panic cuts is they have the opposite impact of what the central bankers want. They're supposed to encourage people to go out and borrow more money and do stuff, and people have the opposite reaction. They say, "Oh, if the central bank is panicking, that means there must be something that they know that I don't know. So I better hold off and wait, and maybe repay my loan rather than taking out a bigger loan." So that's what a lot of people think the emergency cut that the Federal Reserve did last week, 50 basis points, didn't have the intended impact because they just caused people to worry more.
Yes, as soon as you call anything an emergency move, people interpret it as a panic move.
Yeah, they didn't call it an emergency move, but the U.S. Federal Reserve move was not at a regular meeting, so it was definitely an unusual move. And then all the pundits called it an emergency cut. And then the next day, the Bank of Canada cut 50 basis points. Now, technically, it wasn't a panic move because they actually had a regular meeting. By coincidence, they had their regular meeting was scheduled for that day. So they just met and then they did a cut, which was much bigger than normally they would have done. So it's debatable. But the Federal Reserve one on the Tuesday last week was definitely an emergency cut. They didn't even have a meeting schedule, and they went ahead and did it. And and then this week the stock market's down a whole bunch on Monday and Tuesday. So the what are they going to do? Cut rates more? It's all that would do. All the signal that would cause would be that it's an even bigger panic than it was before, right? So it doesn't really help the financial markets, and nobody pays those interest rates that the central banks are cutting anyway. It's just an overnight rate that is a very, very unusual, limited application. But generally, the bigger rates are coming down. Mortgage rates are coming down. Bond rates are coming down. It's designed to help, but it might actually be counterproductive.
Hilliard, thank you so much for chatting with us.
Nice to be on your show.
My guest has been Hilliard Macbeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethgroup.com. If you have any questions for Hilliard or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.